Today is Monday, September 18th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADMIS's Senior Financial Economist. Steve, let's start with the grains today. What is the latest on corn, beans, and wheat in the U.S.?
As far as prices are concerned, beans are testing the upper end of the trading range. I think China's come in and bought beans, and people were kind of wondering if they would after the bearish USDA September report. We're also a little bit worried about South American weather. It's dry in Brazil and wet in Argentina. Now, our weather guy thinks that October 1st things will straighten out, but until then, you're seeing some spec buying in the bean market. Corn, we're in a trading range, basically between 340 and 360. Doubt if we break out of that. People are talking about lower corn yields, but also the farmers got a lot of corn to sell, and our export demand is pretty slow. And wheat's probably in a 420 to 460 range with just too much wheat in the world, although there were some concerns about Australia's crop because it's too dry, and there was a private estimate last week that lowered last year's wheat crop a little bit here in the United States.
Steve, can you tell us what the fund positions looks like right now in the grains?
Right now they're short meal, and they're short corn, and they're short a lot of wheat. They're long a record amount of soybean oil and pretty much even in the beans. And so overnight the soybean oil took a little bit of price off its recent rally because of this record long in soybean oil. So now we have to see if the funds want to take these positions into harvest or want to start taking them off.
You mentioned South America weather. Are there any concerns at all at this point down there?
Well, I mean, we watch like the coffee market has rallied from its lows because of the dryness in Brazil. And we've had a few brokers ask us, is there enough concern for the dryness in Brazil to move coffee higher? It might have helped the bean market. Right now, as I mentioned earlier, our weather guy thinks that things are going to even out by October 1st. And we're not really into the deep planting season yet. But right now, Brazil is dry and Argentina is wet.
Some analysts are already estimating 2018 U.S. crop acres. What did they say?
Well, it was kind of an interesting week last week because in corn, we've got about 91 million acres planted this year in the U.S. And that's what people think is going to be planted. But next year, they've got them up to 92 million acres. So even though corn prices are low, the first guess was actually farmers are going to increase corn acres next year. In the beans, we've got about 89.5 million planted this year. The FSA acres came out almost a million acres more. And then for next year, they're going back maybe a million acres less. So that's next year around 89 million acres versus 90 this year. Not much change in the wheat acres. Next year might be just up a little bit from this year.
Alan, let's talk currencies for a moment. The British pound advanced to a 15-month high against the dollar today, which is the highest level since the Brexit vote. Why is the pound higher, and does this affect Fed policy at all?
Well, basically, the Bank of England at their policy meeting last week indicated that they are likely to withdraw some of their accommodation. So this caused traders to believe that the Bank of England may be raising rates, possibly this year, but more likely next year. We would think probably by February. So interest rate differentials are starting to suggest that the pound will continue its advance, and we would tend to agree with that. So look for further gains in the British pound. As far as Fed policy, if central banks around the world are raising rates, it puts pressure on the Fed here to do the same. So there is still a fairly good possibility that they will raise by the December meeting or possibly in the first quarter of next year. Either way, the Fed is going to raise, and I think there are several rate increases in store.
Since July, gold futures have rallied $150. In the last few weeks, however, the market has given back some of those gains. What's the outlook for gold futures now?
So the gold market's been down, and a lot of this is due to flight to quality long liquidation over the last couple of weeks. But nothing has changed in our inflation view. Ultimately, it will be inflation that drives the gold market higher. So we do believe that before the end of the year, the 1375 chart objective that we have will be taken out. So there's a lot left to the upside, and I think this is just a correction in the gold market.
Alan, you continue to be on the right track regarding the direction of the stock indices. New record highs today. What is the outlook for stock index futures now?
Nothing has changed at all. We continue to get a lot of questions on the stock index futures as when this market will top out. And our work suggests not anytime soon, not this year, probably not early next year. Even though the Fed will be raising rates again, as we mentioned, either in December or in the first quarter, another rate increase from the Fed will not take rates high enough to reverse this bull market in stock index futures. So by every break, the indices will continue to advance with what we're seeing.
Yeah, Alan, even 2, 3, 4 more rate hikes. We're not talking about historically high interest rates.
Exactly. With these record low rates that we have come off of, there is a lot of room for the Fed to raise and still not to take the rate high enough to reverse this bull market. So nothing has changed. We can withstand more rate hikes from the Fed.
One last question for you guys. November crude oil is trading right around $50 a barrel. Do you think this is good value area right now for crude oil? Are there any overriding factors that may play into this market currently or in the next few months?
Well, the OPEC market continues to talk about cuts, and maybe even the Russians might be talking about cuts. We're seeing the rig counts come down a little bit here in the U.S. We're still watching the fracking supply. I think that some people feel that $50 is strong resistance, and we'll need to see an increase in demand both in China and also here in the United States in order to get much over the $50 barrel price level.
All right, remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.